Good evening and welcome to the Shadow Trader Weekend Edition. My name is Peter Reznicek from ShadowTrader.net. Lots to talk about, especially since I haven't seen you for a couple of weeks. Obviously, lots have happened since then. We're going to get into all of that. The title of today's show is Bears, Bonds, Bitcoin, and Gold, because I think these are the four different asset classes that I think we should be looking at right now, some of which are already setting up for a trade, especially the bear part of it. I know most of you tuned into this for an idea of what's going on in the equities market and how to play it in the coming weeks. But also bonds, gold, and Bitcoin are definitely making some moves or about to be making some moves. And I think there may be some trades on the horizon there as well. So without further ado, let's get into it. The last 2 weeks in the market and this week, of course, looking back, have been very, very exciting in the markets. The first huge catalyst, of course, is that we did have an election on November 5th, and that sparked a rather euphoric and kind of momentum-based rally, it felt like. But more importantly, that rally has now been 100% retraced back to the downside, and I think that's very, very significant. We'll talk about that in a moment when we get into the charts. The other thing I want to mention before we get into them is the fact that Powell spoke this week and basically said that he was not in any hurry, or the Fed themselves, I should say, are not in any hurry to lower rates. And that's another thing also the market didn't like when it heard it. And remember that these sort of Fed comments, they tend to sort of carry through the market, right? The same way that we carry everything forward in our narrative, the market carries that forward in its narrative, and I think it's a little bit more bearish than bullish. So just keep that in mind. Let me start you off on the S&P daily here so we can see really clearly this move post-election and the move we just got recently over the last couple of sessions. So obviously this is the move here of the election. This is November 5th right here. And then we gapped up and we started to move. And this is the momentum move that I was just talking about. And you want to think about momentum as sort of like a fancy way of saying short-term traders, traders who are chasing, right? I believe that it's not really an institutional move that way. Those moves are more sit back on the bid, wait for price to come to you, fill it on the bid, move the bid higher, etc. And thereby larger traders support the market in that way. When you see price action like this, especially when it's on the heels of a gap and the gap doesn't fill at all, as we saw here, that's a lot of short-term trading. And here's where things get super interesting in that over the last few sessions of this week, we've now retraced 100%, right, of that move. 100% of the up move has been retraced, leaving us only with the gap, correct? All that's left now is the gap to fill. And this is where I think, again, things get interesting. We also came down in the move on Friday below the 21 EMA. And this is kind of noteworthy because we were generally obviously quite far from it when we were up here and coming all the way down, breaking the 8, coming to the 21. My thesis here is that the market now has enough downside momentum to fill the gap. And that's what I'm looking for. In the S&P, I'm looking for the gap fill probably in this week, which is going to put us at 5783.5. So remember that number. That is the target for the S&P, which would fill the whole gap. After that, I'm not too sure. But if the market was to have some larger downside in it, right? If there are stronger sellers that are going to emerge in this market, we should pay attention to the fact that this is a very tight balance area here. We've got these 4 sessions here. So losing those sessions also is going to bring in a lot more sellers because why? This is a balancey area. There was two-sided trade going on there. Half those people are long, half those people are short, and that's going to be a big disappointment as well. But obviously we don't want to get ahead of ourselves right now. Just focus on the gap. Focus on the fact that we closed below the 21 EMA, which has been a while actually. I mean, look at all the way back here. Only here in the section that I was talking about was the last time we were below the 21. All this action was there above it, and also we have some consolidation here, which would also be some overhead supply as well if we were to get down to this area. So again, I'm focusing on that gap, 5783.5. That's my target for S&P for next week. Onto the NASDAQ 100 side of things, and this, what I'm about to show you, I believe, is more fuel for the fire for the S&P to move lower. There's a definite divergence going on here in terms of relative strength, relative weakness, where the weakness is on the NASDAQ 100 side, and I think that's important. Remember that these two markets are very connected. There's a lot of interplay between these markets, and if one is weaker than the other, it oftentimes makes it more difficult for the stronger one to rally. And I think that's what we're seeing here and what's going to be happening, because notice the reference points that you see on the chart here as far as the 21 and the distance to the gap. These are the same reference points that I just talked about in the the S&P, but look at how much deeper of a retracement it is in the NASDAQ 100, right? We know that 100% of the election gap fill is here, right? We know that, and I just showed you on the SPX chart, you were right about here, which is a huge difference. Not only did you retrace 100% of the move of the election sort of euphoria there, look at how much deeper you went into the gap, right? It's a huge difference, leaving only this space here, actually really this space here, just much, much smaller. The space is obviously always from the lowest point of the range, never from a close or whatever. Lots of people look at gaps, I think, the wrong ways. They feel that a gap fill is something that comes down to a prior day's close. It's not true. It's actually the section on the chart that is blank, basically. So if it's a gap up, it's from the low up here down to the high up here, etc. So from the shadow of today's lows on Friday here, we don't even have that much more to go. My target on the gap of the NASDAQ here is the 20,250, basically 20,249.2 is my target. So we're not really that far off. We closed here at 20,394.13 on Friday. There's not that much more to go. Same thing as far as this area is concerned. I don't need to go back over that. Obviously, that's similar to what's going on in the S&P. But again, more than likely, especially in the NASDAQ, you do get a full gap fill here, even if it's going to be a little bit more difficult in the S&P. And this is why, not for nothing, in my advisory, we are long a QQQ put spread targeting the gap, but we didn't do one in the S&P, right? You have to be cognizant of where relative strength and where relative weakness is when you are choosing a trade, right? You know the market is going to be going down, or at least that is your thesis. Picking your spot is just as important as knowing what that bias is, right? So you want to always go for sort of the weakest one if it's going to be a short. So for me, that was QQQ earlier today, which we managed to get off right up here just as we were 100% retracing, and obviously the trade is looking pretty good for us. So we're targeting that low end again next week. 20,250 roughly is going to be your NDX 100 target on the downside. Let's move on to Bitcoin, which is a subject that I think has been on everybody's mind recently, although not as much as I would have expected. It feels to me like the retail money is not there yet. It's not as big of a story as it should be, but obviously we had somewhat of a breakout finally from that 75,000 level, but it has not been an easy trade to manage because from a technical basis in terms of how it's acted on the charts, I don't think it has acted this go round like prior breakouts, which were much cleaner. Let's take a look at the charts if we could. I put up a daily here of the Bitcoin futures contract. And this is obviously showing the consolidation here, which was in the 68 to say 72, 73 area was here. We spent lots of time there, as you know, going all the way back left on the chart. We were there for eons, it seems like, anyway. And then we had this break here, and notice what happened here. This is before the election here, but notice what happened here. It just kind of paused, where you actually broke out to new highs, like above the 74K level, and paused. And then since then, here's where it kind of got tricky. There's really been only one expansion of range, which was just one day. It was this day right here, and after that, it was doji, 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 and then today we had a little bit of expansion of range to the upside. So it feels to me like the move is still on, but it's been different from the others because if you realize, or I should say, remember before when Bitcoin is broken before, it's like doubled in like 3 to 5 sessions, and it's been a very clean move of big body candles straight up. So overall, I do believe that the trajectory is still on, but this one's been a little bit tougher to trade. The 100,000 level still looms just above us up here. That is the obvious target. I thought that people would be not selling Bitcoin at all at 94. This was also a thing that was a little bit puzzling to me. Maybe it didn't get high enough, but I felt that once we finally breached that 90,000 level, why would there be any sellers? It just didn't make sense to me, but it did. Obviously, some sellers came in. People took some money off the table around that level, but overall, we should be chugging a little bit higher up to that 100,000. And as I've said many times before, my overall target here is 125. Now, just as a point of reference, what have I been doing with Bitcoin? I wanted to just show you this chart here for a second, or rather these snapshots, because I've talked about this trade a lot. I was obviously very early on it, saying that this trade was in play months ago. It never really set up. So these are just some snapshots that I took of what I had going on in Bitcoin this week since the breakout. Full transparency, I am flat all of this stuff now, and none of these pictures were taken at the high at 94. They were actually taken at 91,000 after the pullback. Overall, not bad. Just adding up, notice I had Bitcoin futures, GBTC, and MSTR, which is, of course, the most leveraged Bitcoin stock. Altogether, about 400K. Decent. And I know this seems like a flex, and I know this may seem like a humble brag, but I'm telling you, this was one of the hardest trades to pull off because of how it happened. It just didn't feel right. And from my perspective personally also, it was a little bit extra hard for me because I was on a plane and a train, about probably like 10 hours of travel, all during election day, especially in the afternoon, once people were already voting and results were coming in. And then on election night, when the votes were being tallied, when all this really happened in terms of the big push in Bitcoin, big push in futures, etc., I was on a plane. So it was really kind of a tough trade for me. So overall, the sizing that I had was not what I wanted. I had planned this trade out for a long time and I wanted to have much bigger size, but because of the travel and sort of not being at my desk, etc., I decided to go a little bit smaller. And as I saw that the Bitcoin was stalling at 94, which didn't make any sense to me, that's why these exits occurred. And I basically just took the profit that I had. So going forward, am I going to get back into Bitcoin? I would say yes, but probably a little bit more gingerly. Take it easy, smaller size. I'll probably be looking for pullbacks. I'm going to be watching the charts very, very carefully going forward to make sure that no technical levels are breached. We don't have too deep of retracements, and basically just kind of feeling like it's doing what I think it should be doing. Let's go to the bond market now. This is the asset class here where I'm not sure there is a trade right now. I am not in a trade right now, but this is one of those things that I think has bearing on the market and is basically telling us something. As you can see from the chart here, after coming off of these highs, it has been a straight down move, as straight as it can be in bonds because we know they're very choppy, but it's really been a straight down move that has broken some trends here. And to me, looks like we are headed for about the 87 area here in the TLT. I like to use this ETF TLT here, which is for the long bond. And there's two basic takeaways from this chart. One is that if this low gets lost, you've probably got a trade from about 90-ish down to that 87. That's a decent trade. Obviously, if you use the /ZB contract, it could be a little bit more leverage. You can make some more money, but I think there's another move down here, whereupon there's probably a support level, could be a long in bonds. But more importantly, what I think this chart is telling us, if you recall from past videos, I'm not sure if it was the last one or one before that, remember we were on the other screen and we looked at all of those different reasons as to why interest rates, or I should say yields on bonds, are actually rising when the Fed is in a cutting cycle or after they made that big first cut of 50 basis. And yet yields are rising and prices are falling. So this is something to pay attention to, especially if you're slightly negative on equities, because I think that it is a negative signal. It is telling us that people are demanding higher and higher rates for this paper, basically, in order to loan money to the government. And I don't think that's really a good thing. If you recall from that list of factors that we talked about, that was one of them. One of them, of course, was technical, that the market kind of got ahead of itself. The bond market prices basically got ahead of themselves in anticipation of the cuts, and now it seems like the cuts may not be coming as much as is expected, right? And it needed to sort of recalibrate. And if you recall, I mentioned earlier that Powell actually spoke this week and said, we might not be in that much of a hurry to be cutting. So now the odds of getting another quarter point in mid-December fell quite precipitously today. And I think it's more like something like 60-40 an hour, 65-35, I can't remember, right? But those odds have really dropped by a lot. Whereas before this week, those odds were much, much higher, that we were definitely getting that quarter point in December. So all of this kind of weighs on the bond market is important to note. So basic takeaways, think of it as a potential trade. I think any movement below that 90 level in the TLT should take it down to the 87. And just keep this chart in mind in terms of what it means for the broader market as a whole. Moving on to gold now, and this goes back into the first category of instruments that I believe are ripe for a trade or are going to be ripe for a trade soon. So this has been a put seller's dream for a while as we've moved up in this whole range. Myself and people who follow my advisor, we have been selling puts in GC futures, which are gold futures. They're pretty lucrative. There's a good amount of premium there. And the beauty of it is also that those puts are Monday, Wednesday, and Friday. They're 3 times a week, which is really nice. So you can collect plenty of premium. And we stopped right about at the right time as gold started coming off. We stopped basically selling the puts. And then we got into one long, which was on the pullback here, right to this trend line, and got out with a loss because that didn't work. So that gave us a lot of market generated information as to what is going to happen now, or what is happening, which is telling us that gold is moving lower right now. But I don't believe that this is going to be turning into a bear market or changing trend. As you can see, as the trend lines are fanned out, primary, secondary, tertiary, going up, we've only started to break the more steeper trend lines. This is very, very similar to maybe what happened in TLT, where it just got ahead of itself and it needs to recalibrate a little bit. And on top of that, what's also happening here is the fact that this is a snapshot of the dollar index, right? Look at what's been happening in the dollar recently. So of course, gold and the dollar tend to move inverse, and you can see that the rip in the dollar has been absolutely magnificent. I mean, it just has absolutely just exploded up to the upside. And in the last week, look at the green candle at the end, even higher. It is at somewhat of a resistance area right here, but we shall see. All right, so obviously this dollar index does have a lot to do with gold as well. Going back to the chart itself of gold, what is going to be the play here? I believe that the play right now is to wait it out and wait for this area here to occur, which is about 2450 in the GCs. Notice that what that would do is bring you closer to this breakout point that I think is very, very important on a technical level. If price gets down there, the slower the better. That would make more sense to me as well, instead of a big flush. But gold is kind of like that. It's one of those instruments that can happen either way. It could be a flush down to that level, and that's all the selling there is, or we could creep down to it. I like to see charts that I want to buy generally come down slower when they find technical support at the bottom of a range, but we'll see. But anyway, that's what I'm looking at right now. I'm probably not going to be looking at anything long in gold until then. Or the other thing is that, and this certainly could be an outcome, I've got this chart here set to a weekly, but if I go into a daily a little bit more granular, if we start to catch some traction here and we never get to this area, right? And basically the pattern starts to go more like this, where it's sideways. If that sideways action translates into 5 sessions, 7 sessions, 10 sessions that keep going, that is also going to be a signal to me that we're not going to go to the target here at the 2450, and we're actually going to turn back up. Remember, this is a concept that we've talked about a lot in this program. I mention it all the time to my subscribers, and that is the simple fact that lots of people get themselves in trouble because they assume that the bearish flag like this has to be continuing to the downside, and often it does not. When this action lasts a long time, the next move is generally up, because from that point, so many people are piled in short on that pattern that it doesn't take much to bring in the short covering as it starts to lift. So just thinking that also is a scenario that could happen in gold, is that we sort of flatten out here, never come to the 2450, see what's going on in the dollar, if it's going to have any chance of pulling back, and then we start to turn a bit higher, and we'll see. All right. So outlook in gold is there, potential support at 2450. I am still a longer term bull, and I'm looking for the pullback buy. Time now for our sector spotlight, which this week is healthcare. Interestingly enough, not a sector that we talk about that often, but one that everybody should pay attention to because it is very heavily weighted in the S&P. About 11% of the market is healthcare stocks. Some of these names you've probably heard of, such as Lilly, Amgen, Merck, etc. These are more or less the top 8 to 10 stocks that make up the XLV index, but I'm more interested really in the index as a whole. So let's take a look at the chart over here of the ETF, of the XLV healthcare. And what's really important here is simply 2 things. One, that I feel this ties in with the thesis that the markets do have potential to move lower here, and the fact that it is 11% of the market, and that's why. If you look at the pattern here, it is quite bearish in terms of the rollover. You've got a classic uptrend line break, huge expansion of range, and look at the space here that's left to the support at around 138. That's where I think we're going, and that's what I think is going to be a little bit of more fuel pushing that S&P towards that gap fill, as we were talking about earlier in the program. So again, healthcare stocks weak, 11% of the S&P. If they continue lower from a technical basis, which I think they should, at the very least to this prior support in the 138 area, it will be all the more fuel on the fire, so to speak, of pushing the S&P a bit lower. Time now for the number 1 draft pick. This is the segment where I try to leave you with one good trade idea for the near future. This week's pick is McDonald's. Not a stock that we talk about all that often, Michael Charlie Delta is the ticker. Let's take a look at the charts over here. If you've been paying attention to the news, McDonald's has had some issues recently with the E. coli breakout that's been putting some pressure on the stock. And you can see that in the chart right here, which we'll get to in a moment. There was an article recently in Barron's talking about the fact that there was a huge drop-off in traffic, obviously on the event happening, where the thing with the onions and the quarter pounders, etc., was happening. But they were talking about the fact that once that died down and they remedied the situation, foot traffic at stores in those locations did not pick back up as much as was expected. So that's kind of the fundamental backdrop here. But of course, since I'm a technical trader, it's all about what's going on in the chart. And my focus here is really on the fact that the action here on Friday is what I call the buyer's shut-off pattern, in that it is one bar, or I should say it is one bar, that has taken back multiple bars before it that have been moving in the opposite direction. So just to recap, how does the buyer's shut-off and seller's shut-off pattern work? It's very simple. Buyer's shut-off is when you have small body candles, preferably at least 3 that are green. In this case, it's green and red. It's all mixed up, but they're relatively smaller candles, all moving up. And then one large red candle basically engulfs all of them. I call that buyer's shut off, because it's telling you that basically the buying has basically been shut off. And I also use that as a signal that I can then sell calls up at the top, basically. You know, at the top of that range is where I would be a call seller. So that's what's happened here. There was a little bit of a bounce late day. As you can see, Friday, it would be a little bit more bearish if we had closed around that 290 level, but that's the trigger that I'm looking for. If I can see the 290 level here, I did put a Fibonacci on the whole thing from low to high of this move, and the 50% retracement takes you to about 280, which is a $10 move in the stock, which is decent. So if we can see a retest of that 290, and I would wait for that to happen. Remember, professional traders do not buy low and sell high, right? I know that seems counterintuitive. Professional traders buy high and sell higher, and they sell low and they cover even lower. And this is something that newer traders, I think, don't understand too much, but that's really how the game works, because you want the market to show and prove, give you the confirmation that you need, that's going to give you the confidence to get into that entry, okay? So anyway, if we retest that 290 level, this is the key spot right here. Again, I think it's a risk reversal situation, meaning short calls, long puts, targeting that 280 level in the stock at least, which would be the 50% retracement of the most recent move. And that's all for this week's show. Thank you as always for spending a little bit of your weekend with me, trying to educate ourselves together about what this market is doing and where it might be going in the future, all right? Remember, you can always trade live with me every day and my team, Live Trading Suite, Weekly Option Advisory. Both of those always have a $7 1-week trial. Can't make it any easier for you. Super cheap, $7 gets you in for 1 week. As always, with everything at ShadowTrader, it's always a one-click cancel. You do not need to call anybody, you do not need to email anybody, you just cancel it yourself with 1 click, so there's really very little risk to you. All of the links are in the description below. Also, very, very important, if you want to check out our services, as we've had this promotion running for quite some time now of 6 months of the Live Trading Suite free with an account opening at tastytrade. Okay, that is still going on in 2025, but I want everybody to know that that is going to be curtailed a little bit, and it's only going to be 3 months free in the new year. So this is probably a good time to take advantage of that promotion if you want to get 6 months free of the Live Trading Suite, which is 2 rooms. That's a stock and options room and the futures room, 9 different moderators helping you out every day live the whole day through. Check that out. Link is in the description below. 6 months free with a funded account at tastytrade, but only until December 31st. Right after that, we're going to be going down to 3 months. All right. As far as the markets are concerned, I've laid out the case here as to why I think the momentum here coming down of the 100% retracement off of that euphoric election move, why I think that that change in momentum could actually carry us further down to the targets that I talk about, which would be the full gap fill on the S&P and the full gap fill on the NASDAQ. Remember, the NASDAQ is much, much closer, so it's going to fill that gap first, and you want to be watching for that very, very carefully, because more than likely there will be a bounce there, and that, of course, will turn the ES as well, and the ES will probably be somewhere in the middle of the gap at that point. All right. As always, thanks again for watching. I'm going to see you next week. Coming at you from beautiful Los Angeles, California. I wish you good trading and good night.